Hey everyone, thanks for joining. I want to take a quick second to go over something that I think is very, very important and that anybody with a mortgage right now should be listening to and paying attention. Right now, under the CARES Act, they are making it super easy to file for a forbearance. And what that means is you can put your mortgage on hold for a certain amount of time. There's some different guidelines around the rules and forbearance, but I don't really want to talk about forbearance. I want to talk about how forbearance affects you. Now, under the CARES Act, they're not supposed to report missed payments, and it's not supposed to affect your credit negatively. So it's not going to affect your credit score, and it's not going to show any missed payments on the credit report. So where would it come up as a negative? So there's a little comment section on each creditor's line, and creditors can put things in there such as paid as agreed, charged off account, repossession, any number of things that apply to that line of credit. Well, what I'm seeing right now is a remark that says affected by natural disaster. And this is a way that servicers are reporting forbearances without actually saying the home is in forbearance. This may change, but right now this is what's being put on the credit reports. Now, this really affects you if you are trying to refinance your house or apply for a new mortgage. Essentially, you have told the bank that you can't make your payments for whatever number of months this may be, whether it's 3 months or 6 months, and you're applying for a new mortgage. So typically, our guidelines are we want to see a clean mortgage history for the last 12 months, meaning no 30-day lates. Now, this is not reported as a 30-day late on your credit report, but if you file for forbearance, that means you're not making your mortgage payments currently. So the chances of you getting a mortgage are very, very slim. You're gonna have to jump through a bunch of hoops, show a bunch of paperwork. If you've made your current payments, even though you filed for forbearance, you might be able to squeak by if your overall credit file is on the upside. Now, there's some guidelines coming out that says if you've made mortgage payments 3 months consecutively after forbearance, you may be eligible. I've heard this from Freddie and Fannie, maybe FHA, HUD, maybe around the same thing. But lenders have their overlays as well, and they may not be willing to take that risk. They may still require the 12-month payment history with no 30-day lates on your mortgage. So if you're planning on refinancing or buying a new home, you should really consider this move before going through with it. Talk to your lender, ask questions, find out how it's really going to affect you in the long run. Now, the other thing that I'm seeing right now is really important is I have seen credit reports come across on current homeowners, and it says affected by natural disaster, but these people have not filed for forbearance and had no idea that this was on there. So check your credit reports, make sure that everything is accurate, make sure that nothing is being reported that shouldn't be reported. Because if you go to do something with your mortgage, refinance, apply for a new mortgage, and that wording is on there, it's going to be a really big hassle to prove that you didn't apply for it. So start looking at that now, start checking on it, and make sure that that's not happening to you. If you guys have any questions, shoot me a DM, leave a comment below. I'm always happy to answer questions. These guidelines are changing constantly right now. There's always new information going out, but as a rule of thumb, no 30-day lates for 12 months if you're looking to get into a mortgage. Talk to you guys soon. Thanks.